Welcome to ForexTV.com. Today's Friday, March 20th. I'm Tim Kelly with your New York Forex Market Buzz. Dollar is gaining lost ground after Wednesday's FOMC announcement on quantitative easing and is higher against the euro, sterling, and yen at mid-session and weaker against commodity currencies of Canada and Australia. U.S. equities are down near session lows and crude oil and gold are marginally lower. Now for a look at the headlines from the CEP news desk. Fed's Bullard says deflation a possibility. Bernanke reiterates recovery dependent on financial stability, and Canadian retail sales improve in January. The Fed's Bullard says deflation is a real possibility. Quote, deflation is a real possibility in the current environments. That according to St. Louis Fed President James Bullard while speaking at an event hosted by the French Central Bank in Paris on Friday. Bullard said that if people begin to anticipate negative inflation due to a longer than expected global recession, the phenomenon could spark a downward spiral in prices, resulting in a deflationary environment. In January, the Federal Reserve projected GDP in the U.S. will decline between 0.5 and 1.3% in 2009 and grow between 2.5 and 3.3% in 2010. The Federal Reserve Chairman Ben Bernanke says recovery is dependent on financial stability. He says the U.S. needs to develop a mechanism to unwind systematic vital institutions. Bernanke made those statements on Friday at a press conference, but added that until the financial system is repaired, an economic recovery will be difficult to achieve. Now, speaking at the convention in Phoenix, Bernanke went on to say that recent actions taken by the Federal Reserve should help to lower consumer interest rates such as mortgages. Chairman also said that too big to fail companies are complacent about risk, calling too big to fail an extremely serious risk that officials need to act on immediately. Bernanke also said that regulators should monitor executive compensation. In Canada, retail sales see a partial recovery in January. Following the sharpest decline in more than 15 years in December, Canadian retail sales were back on the rise in January. That according to Statistics Canada, January retail sales excluding autos rose 1.3% compared to the previous month. Economists had been expected a 0.5% rise following the 3.1% decline in December, which was revised up from negative 3.2%. Headline retail sales, including autos, rose 1.9% in the month to 33.7 billion Canadian dollars, against expectations for a 1% rise, and following the 5.2% contraction in the previous month, which was initially reported as 5.4% decline. January's rise is the largest monthly gain in more than 15 years. Preliminary data, however, suggests the number of new motor vehicles sold fell by about 2% in February. Meanwhile, December's 14.8% decline was revised down to a 10.8% contraction. The ECB says maneuvering room, they have to use maneuvering room on rates. That according to Weber. ECB Governing Council member Axel Weber said in Berlin on Friday that the European Central Bank has maneuvering room regarding interest rates, which he was quoted as saying, which we will use. This suggests that the current level of 1.5% is not the lowest the ECB is willing to bring its key policy rate. Weber also said the central bank could offer long-term refinancing loans and that expensive policies must be taken back after the crisis. Also on the Fed side in the U.S., Fed's Duke says mortgage regulation about to be overhauled. The Federal Reserve is working to change underwriting rules to prevent a deceitful actions that caused the U.S. subprime mortgage crisis. That according to Federal Reserve Governor Elizabeth Duke on Friday. Duke said that from July 1st of 2007 to June 30th, 2008, banks in the U.S. filed 62,000 suspicious activity reports, or SARs, suspecting mortgage fraud. She said the Federal Reserve is already involved in several investigations involving suspicious insiders at banks in both commercial and residential mortgage-related fraud. Today we're joined by Dave Floyd, Head of FX Research and Trading at Aspen Trading Group. Dave, welcome to the program.
Morning, Tim. Thanks for having me.
Well, I appreciate you standing by while we read all those headlines. It's been a while since you and I have talked. I'm very happy to have you aboard. and hopefully you can help us make some sense out of these levels after Wednesday. The FOMC announcement, we had some pretty big runs, Dave. Want to kind of throw it over to you if on the majors. We've come a long way in a short period of time. I think we saw about a 700 basis point gain in euro. Why don't we start there and tell us what you think about these levels? And from a technical standpoint, I know that's your strong suit. What we can expect from the technicals.
Well, from a technical standpoint, depending on how you analyze the market, I tend to use a lot of Elliott wave analysis. So, from my perspective, if you look at the euro, which you cited, there's no doubt that we're probably due for a price pullback here. We've had clearly a five-wave move higher since the announcement on Wednesday. But that would be more of a trade. I don't really see the euro breaking down against the dollar in the near term. Now that the Fed's gone to a quantitative easing mode in a very big way, the dollar is going to remain weak, just like the Swiss franc and the British pound, which have also embarked on quantitative easing. So, yeah, there may be some downside on the euro, maybe back towards 134, but that would be a trade. I think the upward trend has reestablished itself now after Wednesday's Fed announcement.
Okay, Dave, just moving along then, yen dipped down to its 100-day moving average, just do a quick data check, and then pop back pretty quickly. Yen is obviously a special situation in a lot of ways, and we're seeing some two-way movement in yen. What's your take there?
Well, I think the move that you cited off the 100-day moving average is very similar to what I'm outlining or what I'm forecasting in the euro. It dropped real hard, real fast, and I think this is probably just more of a rebound, a correction, for lack of a better term. I suspect you'll see dollar-yen resume the move lower probably in the next few days, but it's probably still got a little bit more upside. I don't think it's the beginning of any sort of a new trend higher. At least that's the way I see it for now.
Okay, Dave, in terms of the other majors, you mentioned Swiss and sterling. Any insights there from a technical perspective?
Sterling is probably in the same boat as the euro, at least from a technical standpoint, meaning that it's probably due for a little bit of a pullback and then we'll rally. I still think the problem with the sterling, though, is that you have the quantitative easing in place. So I think the better way to view that perhaps would be if you want to be bearish the dollar, you're probably better off being long the euro than long the British pound. It's the lesser of the two evils, so to speak.
Well,
I'm sorry. Go ahead.
No, go. Forgive me for interrupting, Dave. I'm just looking at sterling now. It's just trading below its 100-day moving average. The 100-day moving average comes in at 146.85. We've had a run up in the past 8 days with maybe some slight down days. I just wanted to add that in there, see if you thought there was some further upside in the short term.
I think there is some further upside, and I think the difficulty going forward with playing sterling versus the dollar is that you've got two currencies that are both weak on a very fundamental basis. Both central banks have indicated that quantitative easing is going to be their next, or their remaining policy tool. Therefore, I think playing sterling versus the dollar, that's a tough game. You're playing two very weak currencies against one another. It's really more of a slugfest. If you want to be bearish sterling, you're better off by buying the euro versus the British pound and getting a much cleaner relationship because the ECB has not embarked on quantitative easing, at least as of yet. Therefore, the relationship between the two is quite clear. Purely from a relative standpoint, the euro is a far stronger currency than the British pound. Therefore, I think that's the better way to play a weak British pound going forward, not against the dollar.
Okay, Dave, outside of the majors, before we spoke, you spoke about some interest in some of the crosses. You want to expand on that?
Well, I was going to touch upon a little bit upon euro sterling, which I just did. So I think that'll be that's pretty much a good one to look at. I think pretty keen on that. I'm not a buyer at current levels, but I am probably going to be looking to be a buyer of that currency down into the 93 area, maybe 93 and a quarter. We're currently trading at 93.84. So I think we probably have a little bit more downside here, but the trend is up. So euro sterling is certainly one that I think will be worth watching. And I think also if you look at euro versus the Swiss franc, again, same dynamics. The euro strong relative to the Swiss franc. If indeed the equity markets remain firm, euro versus Swiss franc will be a good way to capitalize on that as well.
And Dave, what's your horizon on these two? Are these trades or are these longer-term outlook?
Well, everybody's got their own definition of longer term, but these would be considered longer term for me. Euro sterling and euro Swiss, I would look at these trades with probably a duration of a few weeks, maybe even longer, but not something anything less than that.
Okay. Hey, Dave, I usually do this at the outset of our discussion, but since you haven't been on with us in a while, I want you to, if you could, just tell us a little bit about Aspen Trading and what you do there and what the company does.
Sure. Well, our primary business is selling our research and our trading ideas to individual traders. We've got some prop traders in London and New York at some of the big banks that get it. And we also do managed accounts, although that's a relatively new portion of our business. So, essentially I sit in front of my screens all day, monitoring the market, strictly the Forex market. I mean, I monitor a lot of different markets, but we publish research just on the Forex market. And, overall, we are technically based. We do have a fundamental understanding of what's going on in the market, and we definitely target more of the swing trading market where your trades are lasting on average for a few days. Nothing usually less than that.
Okay. And Dave, what's your website address?
The web address is www.aspentrading.com.
Great. Hey, Dave, thank you for joining us today. Appreciate your insights.
Not at all, Tim. I appreciate it as well. Have a great weekend.
Thank you. This has been your New York Forex Market Buzz with Dave Floyd of Aspen Trading. I'm Tim Kelly. Join us later this afternoon for PM Exchange right here on forextv.com.